Hello everyone, this is today's video analysis for April 3rd, 2019. Today we're taking a look at the EURUSD, the euro versus the US dollar for today's trade analysis. Starting here on the daily time frame, I've zoomed way out so we can get a long-term perspective of this currency pair. Overall, long-term, we're going back last year. March, April of 2018. Top left-hand corner of the chart, of course, we have been in a downtrend since then. The market had an aggressive fall last year about this time. We started moving lower and pressuring from all the way up into the 124 level all the way down into the 117s. And then it went into a bit of a range here for a period of time, black box. Broke out, made a new low, and really since this vertical green line, which we're looking about end of October last year, 2018, we have overall been in a range again. I mean, it's really just been contained and constrained within this black box here. There hasn't really been a long-term trend movement here for the euro dollar, not a significant one like what we saw March, April, May of last year. We've just been kind of moving sideways for the past several months, sometimes falling, sometimes rising, and nothing really too significant. Now that we've seen that history, let's go ahead and zoom it in a little bit. Now, there are periods where a couple of weeks it goes into a downtrend or goes into an uptrend. We could see that here where it went down and then turned around and went back up, and it reiterated that pattern here and here and here. So now we've been in the downtrend, and the question of course is, are we going to see reversal now? Is this now going to create maybe a double bottom here where we see the two lows down here close to the 111.85 level, and are we going to see a significant rise? So what we want to identify here, and we'll talk more about this in the live trade room later today, is areas where we could identify as levels of decision, levels where the market will make trading decisions depending on the direction the market's going in. Let's go ahead and zoom it in a little bit, and I'll just really kind of boil it down here in this video to three areas. So of course, the orange zone is resistance right now. We've seen the historical support here, we've seen some resistance here, but right now the orange zone is our resistance. That's 112.55, 112.75. So clearly, right now, it wouldn't be the best opportunity to take a long, even if we were looking for a reversal similar to what happened over here. You know, if we were to look for it to go up like it did right here, we're looking for clues to reversal. And probably the best place or best timing to enter a long is not going to be right now. Under the orange zone. It would be on a dip, maybe back down to the pink zone, 1.1225, 1.1210, to give us better risk reward. Think about what your risk is right now. Even if you were to say, I'm going to put my stop loss underneath today's low. All right, so let's see, market price here, going underneath today's low. You're looking at maybe a 50, 60 pip stop loss if you put it underneath today's low. That's not incredibly bad, but it's not the best that we could possibly get. If we wait for it to come down to the pink zone to buy it, dip into support 112.25 to buy it, and then let's say put our stop loss underneath today's low, we're looking at maybe a 30-35 pip stop loss. So we've cut our risk dramatically, our potential loss if the market goes down dramatically for any buys that we could take just by waiting for it to come back down to the pink zone. So, and our profit targets, our potential resistance becomes further away then, doesn't it? So if we wait for it to come down to the pink zone, the orange zone's farther away. So is the green and yellow zone as it continues to go back up. So risk becomes smaller and targets become larger if we buy closer to the support, which currently is the pink shaded area. We can really see it even on this last trend when the market did turn around, had an infusion of buy orders. It got above that pink zone, and just think about buying on that candle as it sat down on top of the pink shaded area. Just think about how much better your potential was by buying that little candle right there that's circled in black. So if this were to take a dip down to the pink zone, I think that's a better place to buy it, targeting the orange, green, or yellow zone. Now obviously we've already touched down here into the blue zone. That would be the next support. If the market was able to break down through that pink zone, that would be the next support. So that's why our risk is under the pink zone if we were to take a long. Now, what about going short? You know, that's a possibility as well. Trend has been down, and we've seen the market pressuring lower. The possibility of going short at the orange zone is something we'll talk about as well, because Of course, the risk reward is not too bad in the favor of that either. We just don't want it to get above the orange zone, because history says that if it gets above the orange zone, 112.75, it's going higher. So right now, we don't want to buy because we're into resistance. We want to buy on a dip to support, which would be the pink zone. We possibly look for shorts into the orange zone, 112.55.75, as the market may return to the downtrend for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.